Good morning, everybody. We have a higher trade in the grain markets here early on Monday morning. It is 6:30 a.m. Central Time. December corn futures are up 3.5 at 405.5. November soybeans up 3 3/4 at 1053 3/4. December Chicago wheat up 8 3/4 at 634. December Kansas City wheat up 7 at 565 3/4. December spring wheat up 8 1/4 at 568. Fund traders remain heavily long the grain complex. CFTC had their commitment of traders report out on Friday. In the week ending last Tuesday, the funds did add length in both the corn market and the SRW wheat market. They were light sellers of soybeans. So at Friday's close, private groups estimating that funds were net long 196,000 contracts of corn. That would be the largest net long in the corn market for the funds since May of 2018. Funds were estimated to be net long 229,000 contracts at Friday's close in the soybean market. That would be, they've peeled some of this back. I think that the estimate at its peak for fund length in the soybean market was about 270,000, so they've backed that off a little bit. Funds were estimated to be net long 69,000 contracts of SRW wheat. This was essentially, if confirmed, the second largest net long for the funds on record in the SRW wheat market. The only time they held a larger net long was in August 2012. So really into some extreme territory in that SRW wheat market. Brazil will temporarily suspend corn and soybean import tariffs. The Brazilian government typically will tax imports of corn, soybeans, meal, oil from any country outside of this group included in their trade agreement, which includes Argentina, Paraguay, Uruguay, and Venezuela. They're going to lift tariffs, it looks like, from all destinations until early 2021, which kind of coincides with their harvest season there. They've got record high food prices in Brazil, and this is an attempt to try to contain them. Does this mean that Brazil is going to import a whole bunch of corn or soybeans from the U.S.? Probably not. It probably just opens the door to a little bit to get them through to that harvest window. Chinese pork output rose 18% in the third quarter versus the same period last year. This was the first quarter since the third quarter of 2018 that resulted in a year-over-year increase. Of course, they've had this African swine fever issue, which really decimated the hog herd during the last couple of years. We're finally starting to see some larger numbers in regard to both live animals and pork output. So things improving a little bit, and that's really a good thing for soybean demand, as you could tell by these sales here recently. Looking at the weather, we did have some rains over the weekend, and we have a system this morning that's pushing across. It's just leaving kind of the eastern part of Illinois, moving across Indiana into Ohio. Now, looking at the maps here over the next couple of weeks, there's going to be some rain that returns to the Corn Belt. It's going to be like, southern Missouri, southern Illinois, a lot of Indiana, a lot of Ohio. You're going to see a little bit of eastern Oklahoma get some rain. Western Oklahoma still high and dry. Same thing with the Texas Panhandle. Same thing with most of Kansas, Colorado, Nebraska, northern plains as well. So a lot of these areas that have been kind of stuck in this drought situation for a long time now in the West, really very, very little relief in sight there. Really just not a whole lot being seen at all. November grain options expire on Friday. Be sure to examine any remaining open positions there. That is a big option expiration, of course. The corn market's acting very well. Spot month corn futures above $4, up to 405 here. We're just shy of that $4 mark in the DEES 21 market, traded as high as 398 overnight. Funds are building aggressive length in this corn market despite what appears to be a very comfortable supply and demand situation here in the United States. So I don't know what's going on. I don't necessarily know that this is driven by just the carry-out projections or the stocks-to-use ratios here in the U.S. I think part of it has to do with the idea that farmers are selling soybeans very aggressively, and I think the market is trying to buy some corn from the farmer right now, and it's probably succeeding in that. The other issue that some people would argue would be this situation in China. Corn stocks in China have diminished drastically. Corn futures in China traded fresh 6-year highs overnight. We know that China had production issues each of the last 2 years. USDA estimated at the end of the old crop marketing year that China held 66% of all global corn stocks. And there are people out there certainly who believe that these numbers are flawed and that China is really much, much tighter in terms of their domestic supply and demand, and that this could be a factor that may not only be driving prices in China, but also prices here in the U.S. and prices globally. It's certainly something to consider. I don't know if I'm going to jump on the bandwagon and say that USDA is off by an enormous margin in regard to the China situation, but it is something to consider, certainly as the market rallies here at an odd time of year. Soybean market's been kind of sluggish, actually, relative to corn and relative to wheat here the last several sessions. Fund traders, again, have backed off slightly in regard to their bullish stance there. Brazil's caught some rain. They've got a little bit more rain in the forecast. The big soybean planting window in Brazil is really just beginning. It runs kind of through mid to late November. The U.S. government, Brazilian government, just about every private analyst continues to project a record Brazilian bean crop. China continues to buy U.S. soybeans, and I think barring a real major South American weather issue, these purchases of U.S. soybeans are going to stop probably before the end of the year would be my guess. Despite the trade deal and all of the talk and all of the buzz surrounding the trade deal, I don't know that China has yet to buy any U.S. commodity that's not competitive. I think they're only buying U.S. products when they're the cheapest on the export market and when we have the available supplies to fulfill their needs. If you have an example of China buying something from the U.S. that's overpriced when they could have bought it somewhere else cheaper, certainly let me know. But to my knowledge, I mean, they're still low-price buyers. The wheat market's been incredibly impressive. SRW futures, best trade in 6 years overnight. HRW futures rather, best trade since August of 2018. The spring wheat market, best trade since June of 2019. You've got global supply concerns here. Dryness in the U.S. plains continues to build. No relief in sight there. Some key areas of Russia and Ukraine also dry. Large speculators piling into the long side of the market. Now you look at the big picture here in wheat. USDA is projecting the largest global stocks-to-use ratio since at least 1990, and it's got to be longer than that, at a whopping 42%. So you would think that even with some production issues, we've got still certainly a nice cushion here, but this is a crop scare event, and it's more than one country, and that's typically what it takes for a big rally in this wheat market. Cattle market, we traded cash cattle at 108 last week. I think caught the majority of it. It's been kind of soft here. The feeder cattle market's been really soft. A lot of these deferred contracts in the 120s here, your Jan 21, March 21. Stock market's higher ahead of the cash open. The Dow is up about 190 points. S&P's up 27. The bonds are sharply lower. U.S. dollar is sharply lower, which could be helping some of these grain contracts. The crude oil is down about 8 cents. Gold's up $10. If you'd like some more information, visit my website, www.standardgrain.com. Go to that website, click on Grain Marketing Plan. If you would like to know when, how, and specifically I'm pricing corn, soybeans, and wheat throughout the year, certainly check out that subscription service. It's $49 a month. You can cancel it at any time. There's no obligation. There's no additional fee. Nothing like that. It's an advisory service. I tell you what I'm doing basically, and it's via an email that goes out every day at 6:30 Central Time, and also a text message service. So certainly check that out. Everyone have a great week. I will talk to you same time tomorrow.